Welcome to the Investing Iguana's Daily SGX Market Digest for Thursday, July 31st, 2025. I'm Iggy, and for the next few minutes, I'll cut through today's data to bring you critical updates, hidden trends, and my unique take on what shaped the Singapore market. If you're ready for concise, actionable intelligence with zero jargon, stick around. Let's make sense of everything that may affect your portfolio right now, from major movers to market themes, all in a way that's easy to digest and remember. Today, the Straits Times Index closed at 4,092, marking a gentle pullback of about 0.6%. Even so, the index capped a remarkable month, climbing more than 5% since early July and standing almost 23% higher than a year ago. Compared to the rest of Asia, Singapore remains a standout for resilience, showing less turbulence than markets in Hong Kong or emerging peers. Across the blue-chip board, leadership is shifting. Financials and heavyweights like DBS, OCBC, and UOB attracted strong institutional buying this week. DBS alone secured $81 million in net institutional inflows, despite a modest day-on-day dip to $48.26. UOB closed steady at 36.52s, while OCBC was unchanged at 17.04s. In fact, the banking sector as a whole helped cushion the day's market moves, even as global investors weighed the latest Federal Reserve rate hold and mixed U.S. economic signals. Meanwhile, turnover was brisk in the industrials. Keppel wrapped up at $8.08, up slightly, still riding on news of its 24% jump in half-year net profit to $377.7 million. That was driven mainly by real estate, which offset a revenue decrease in infrastructure. The company announced an interim dividend of 15 cents per share, exactly in line with last year. Keppel's stable payout shows the firm's resilience as it navigates sector challenges. Among institutional buyers, Keppel also picked up $27 million in net new inflows, highlighting investor confidence in its diversified platform and management strategy. Let's turn our lens to Jardine Cycle and Carriage. JC&C reported a 23% drop in first-half earnings, down to $371 million. Revenue nudged up a touch to almost use $11 billion, but profit margins were clearly squeezed this cycle. An interim dividend of $1.28 per share was declared, matching last year's. Its share price closed lower at $27.35 before the announcement. Looking ahead, JC&C faces sector-wide headwinds, but ongoing infrastructure bets and regional exposure make it a stock to keep on your radar. SeaTrium, Singapore's offshore and marine specialist, was another standout. Net profit for the latest 6 months shot up by over 300% to $144.4 million, with revenue climbing nearly 34%. These results followed the company's announcement of $240 million in fines related to the settlement of legacy corruption cases. Despite this, shares eked out a 0.8% gain, closing at 244s. With those regulatory issues now behind it and a stronger earnings outlook, SeaTrium's future looks brighter than it has in years. Let's not forget Mapletree Pan-Asia Commercial Trust. The trust posted a 3.8% dip in distribution per unit for the first quarter, along with a revenue drop of nearly 8% to $218.6 million. These numbers reflect weaker contributions from half its properties. Yet, in a sign of investor resilience, MPAC's share price actually closed up at $131. At more than 6% dividend yield and a low price-to-book ratio, it still checks the value box for income-focused investors. Mapletree Logistics Trust also made headlines with the partial divestment of a South Korean property, selling at a premium to book value. The price ended a touch lower at $1.19, suggesting investors are mixed about near-term logistics trends. But value-adding moves like this support long-term growth for the trust. Consumer defensives such as Sheng Siong also generated buzz. The supermarket chain reported a 3.5% rise in half-year net profit, hitting $72.3 million thanks to strong sales growth and store expansion. Revenue increased by just over 7%, and the company is on track to open more outlets in the second half of the year. Still, investors locked in some gains, with the stock closing at $2.13, down 0.5%. Keppel Ltd India Trust showed real momentum among the property names. The trust's net property income and income available for distribution jumped 10% year on year, supported by solid rental growth across its Indian portfolio. Shares finished the day higher at $1.70. Continued economic expansion in India could mean more upside for Clint in the second half of 2025, especially as Singapore funds search for regional diversification. Zooming out, this week's fund flow data paints a clear picture. Institutional investors favored financial services, industrials, and consumer cyclicals, pouring in over $398 million. Meanwhile, retail investors tended to sell down those same sectors while rotating into defensive consumer stocks, REITs, and utilities. This kind of sector rotation underscores the importance of knowing where the smart money is heading, and it was heading into dividend yielders in a big way. On the dividend scene, a flurry of companies announced payouts. Singtel went ex-dividend today, with $10 per share set for payment in August. Suntec REIT also declared an interim distribution of around 1.6 cents, while Mapletree, Pan Asia Commercial Trust, Keppel REIT, and Star Hill Global REIT are all scheduled to pay in the coming weeks. Bukit Sembawang will deliver both a final and special dividend for shareholders as well. In other blue-chip action, Genting Singapore unveiled its new themed attractions at Resorts World Sentosa, with expectations of revenue recovery later in the year. Still, Genting's shares lagged as first quarter earnings came in soft due to renovations and sector fatigue. Venture Corporation had a tougher day, with its share price down more than 5% year to date on the back of weaker consumer tech demand. The company, however, remains upbeat about pushing into new networking, medical devices, and industrial solutions, a space to watch for long-term rebound potential. The broader message for Singapore investors today is this. Yes, there's volatility, but the underlying market remains sound. Economic numbers continue to improve, unemployment remains low, and inflationary pressures have cooled a little. This macro backdrop gives policymakers and companies some breathing room as they recalibrate strategies for the remainder of the year. So here's Iggy's daily market take. While it's tempting to focus only on index levels, the story lies in the ebb and flow beneath the surface. Sectors like financials and industry are quietly leading, while traditional defensives provide ballast for cautious investors. As we sift through ongoing earnings and dividend season, watch for dividend leaders and value names. They might not capture headlines, but they often provide the backbone for stable, long-term portfolios. My top takeaway: don't put all your faith in any single sector, and keep an eye on where capital is moving. Institutional investors, the so-called smart money, have been rotating picks toward yield and cash flow, but retail money is looking for safety. Maintaining a diversified portfolio, focusing on companies with proven earnings, and staying nimble in your holdings are the best ways to navigate the road ahead. Also, be mindful of sector and regional diversification. Asia's economic reforms, especially in India and ASEAN, could provide outperformance opportunities in the months to come. Before I sign off, a quick heads up. August promises an even busier calendar, with major names from SIA to DBS and Wilmar all reporting results. Plus, more special dividends on the way. If you want real-time alerts, urgent analysis, and first access to my market outlooks, be sure to check out the Investing Iguana Premium membership. It's $1 a month, less than a kopee from your favorite hawker stall, and could be the edge your portfolio needs. If you found today's digest helpful, like, share, and comment with your view on today's market action. I read every comment. And for anyone keen to demystify index investing, don't miss my deep dive on the STI. Find the link in the description below. Thanks for spending your time with me. That's your daily SGX Market Digest for July 31st, 2025. Stay sharp, stay selective, and I'll see you on the next one.